Did you know that Europe was the birthplace of the Industrial Revolution? The moment the world went from muscle to machine, it practically built the blueprint for the global economy we all live in today. But here's the twist: the region that once led the charge in industry, innovation, and international trade is now lagging behind. So, what happened? Why is a region that led the world for centuries now playing catch up? And here's the big question: is this just a downturn, or are we looking at the new normal? Hey everyone, welcome back to the channel. If you're into global trends, future investment opportunities, and discovering the next big sectors before they take off, you're in the right place. Because this story, it's not just about history textbooks or macroeconomic theories. It's about the systems that affect your paycheck, your job security, the companies you work for, and the lives you're building, whether you're in Europe or not. And here's the twist: Europe might be slowing down economically, but it's also making different choices. Choices that could either be the future of a sustainable, balanced society or the warning signs of long term decline. We've broken it down into three big chapters. Firstly, we'll explore how Europe builds a modern world and then lost its edge and why. Secondly, we'll dive into how rising global competition has changed the game and what new challenges Europe faces. And finally, we'll look at what happens next. Is Europe truly falling behind or just choosing a different path? Let's dive in. Chapter 1: How Europe Built the Modern World and Then Lost Its Edge. Let's rewind to the 1700s. The Industrial Revolution starts in Britain, and Europe becomes ground zero for the most important shift in economic history. Factories replace farms, machines replace manual labor, cities explode with innovation. Europe leads the way with global trade, manufacturing, and tech breakthroughs. The Dutch even invent the modern corporation. Yep, the idea of a company with shareholders started as a way to fund high risk ventures across the world. The region becomes the economic engine of the world, and it holds that title for centuries. But fast forward to today, economic growth in Europe has slowed, and not just for a year or two. We're talking over a decade of sluggish performance, high youth unemployment in some places, and a noticeable lack of the kind of global giants you see coming out of the US or Asia. So, what changed? Some blame Brexit, others point to the Eurozone crisis, some say it's demographics. Europe's population is aging, and that comes with big costs. But those are just surface level symptoms. If we want the full story, we have to look deeper. And that brings us to Chapter 2: The Rise of Global Competition and Europe's New Struggles. In the last 40 years, the world has created more economic value than in all previous human history combined. That's wild. But here's the catch: Europe hasn't kept pace. Compared it to the United States, both have educated populations, modern infrastructure, and access to capital. But the US economy is booming. Europe, not so much. Why? One big reason: global competition is fiercer than ever. Countries like South Korea, Taiwan, and China took the industrialization blueprint and they ran with it. Europe may have spent 200 years going from farms to factories, but these nations did it in a couple of decades. And once they reached a certain level, they didn't stop. They kept innovating, building global companies, attracting investment, and they left many parts of Europe in the dust. And then there's this: the US has more than double the number of major global corporations as Europe across every industry. Think about the companies you interact with daily: Apple, Google, Amazon, Microsoft. How many of them are European? Probably not many. Even the biggest European brands, like Orange Telecom or Airbus, often don't have the same global recognition. And that matters, because in today's economy, global companies are how wealth is created and shared. So, what's holding Europe back? Which leads us to Chapter 3. What happens next? Is Europe slowing down or changing gears? Here's the part that surprises most people: Europe didn't just fall behind by accident. In many ways, it made a choice. Germany, France, and the Netherlands, these countries decided to prioritize quality of life. That means more social equality, higher taxes, shorter working hours, and better work life balance. Americans work around 1,800 hours per year, Germans closer to 1,400. And Europe leads the world in healthcare access, environmental policy, education, and overall life satisfaction. So maybe the real question isn't why is Europe falling behind? Maybe it's falling behind at what? Is success just about GDP and corporate dominance? Or is it about happiness, balance, and sustainability? And here's where it gets interesting. The world is changing again. Globalization is slowing down. Supply chains are becoming more local. Tech is being regulated more strictly. And suddenly, Europe's model, it might actually fit the next era better. So, is Europe falling behind? Or is it simply choosing to slow down, to build something different? A society where people live better, even if the economy doesn't grow faster. We'll have to wait and see whether that becomes a global trend or a cautionary tale. What do you think? Is slower growth worth it if it comes with better lives? Or is Europe risking its place in the world economy? Let me know in the comments. And if you learned something new, smash that like button. Hit subscribe for more deep dives like this. Thanks for watching. See you in the next one.